In the quiet of the night, when the world slows down and screens finally fade into darkness, a question lingers. Why did Satoshi Nakamoto, the mysterious creator of Bitcoin, decide that there should only ever be 21 million coins? Not 20, not 30, but exactly 21 million. It seems like a small detail, a line of code hidden deep inside the system. But that one number changed the world of money forever. To understand this choice, we must travel back to a moment when the world's faith in money was breaking. It was the year 2008. Banks were collapsing, families were losing their homes, governments were printing trillions of dollars to rescue financial systems that had once seemed invincible. People watched as their savings disappeared, not because they made mistakes, but because the system itself had failed them. In that chaos, an unknown person, or perhaps a small group, released a short document on a small mailing list. Its title was simple: Bitcoin, a peer-to-peer electronic cash system. Inside, there was no marketing, no promises, no company, only code, mathematics, and one radical idea. Money could exist without banks. Money could be finite, like gold. Money could belong to the people again. At the heart of this vision was the number 21 million, the total amount of Bitcoin that would ever exist. A number that could never change, not even by one coin. This was not just programming, it was philosophy, a quiet rebellion against a system where money could be printed infinitely, devaluing the labor and dreams of millions. Tonight, as you listen, we'll slowly unwrap that number, its origin, its meaning, and what it reveals about how humans understand value, scarcity, and trust. So, take a deep breath, let the day go, and let your mind wander back to 2008, when an anonymous voice on the internet whispered a new way to think about money. If you like learning through gentle stories about finance, investing, and crypto, told slowly, calmly, and truthfully, follow Sleep Capital. Each night, we'll travel together through the moments that shaped how we think about value and how we rest with it. Because even in the world of money, there is peace in understanding. The year was 2008. The world economy stood on the edge of collapse. In the United States, Lehman Brothers, a 158-year-old investment bank, filed for bankruptcy on September 15, 2008, the largest in American history. Its fall sent shockwaves across the globe. Banks that had lent to Lehman suddenly faced massive losses. Credit froze. Ordinary people, workers, retirees, students, watched their savings vanish in days. Newsrooms filled with fear. Television anchors spoke of the end of capitalism as we know it. Stock markets plunged. Governments raced to print and inject billions of dollars to keep their economies alive. In October 2008, the U.S. Federal Reserve announced emergency programs to lend directly to financial institutions. By the end of the year, the government had committed over $700 billion to rescue banks through a plan called TARP, the Troubled Asset Relief Program. For many, it felt unfair. The same institutions that had taken reckless risks were being saved with public money, while millions of families lost their homes. People stood in long lines at unemployment offices. Across Europe and Asia, confidence in paper money began to erode. It was in this atmosphere of anger, fear, and confusion that something quiet began to take shape on the internet. On October 31st, 2008, a message appeared on a small cryptography mailing list. It was from a user named Satoshi Nakamoto. The subject line read, "Bitcoin P2P eCash paper." Attached was a 9-page document. Inside, Satoshi described a system where people could send money to each other without needing a bank. Each transaction would be verified by a decentralized network of computers, not by any government or corporation. He wrote, "The root problem with conventional currency is all the trust that's required to make it work. The central bank must be trusted not to debase the currency, but the history of fiat currencies is full of breaches of that trust." Those words were not written with anger, but with clarity, a reflection on centuries of monetary history. Just 2 months later, on January 3, 2009, the first Bitcoin block was created, what we now call the Genesis block. Embedded inside the data of that block was a message. The Times, 03 Jan 09. Chancellor on brink of second bailout for banks. It was the front-page headline of the Times newspaper that day in the UK, a reference to another government bailout. That hidden line of text became a quiet protest, a timestamp showing when Bitcoin was born and why. At the beginning, Bitcoin had no price. There were no exchanges, no investors, no hype. It was just an idea, tested by a few programmers and enthusiasts who believed that money could be different, that it could be finite, transparent, and fair. Early users ran Bitcoin on old laptops and shared results on forums like bitcointalk.org. Every 10 minutes, a new block was mined, releasing 50 Bitcoins as a reward to whoever solved the cryptographic puzzle first. Those first coins had no market value, only meaning. The reward schedule, the one that would later define Bitcoin's total supply, was already coded in from the start. Every 210,000 blocks, or roughly every 4 years, the reward would halve, dropping from 50 to 25 to 12.5 and so on, until one day around the year 2140, the very last fraction of a Bitcoin would be mined. By then, there would be exactly 21 million Bitcoins in existence, never more. In that first year, only a small circle of people understood the idea. Names like Hal Finney, a respected cryptographer and one of the first to run Bitcoin software, appear in early emails and messages. On January 12, 2009, Satoshi sent 10 Bitcoins to Hal, the first Bitcoin transaction ever recorded. No contracts, no signatures, just trust in mathematics. While the world outside was flooded with newly printed dollars, inside this small corner of the internet, a new experiment in scarcity had begun. A kind of digital gold, mined not with shovels, but with code. And at the heart of it, the number 21 million, quietly fixed forever. When Bitcoin appeared in 2009, very few people paid attention. Most saw it as an experiment, a digital curiosity built by anonymous programmers. But hidden beneath that code was one of the oldest ideas in human history: scarcity. Scarcity is the foundation of value. Gold is valuable because it is rare. Time is precious because it cannot be repeated. And trust is meaningful because it must be earned. In contrast, modern money, known as fiat currency, is not scarce. Governments can print as much as they need, at any time. This system works as long as people believe that the currency maintains its worth. But when that belief is shaken, when too much money is printed, value begins to fade. That was exactly what happened in 2008. As banks failed and governments created trillions of new dollars, euros, and yen to stabilize the economy, many people realized something unsettling. Money, in its modern form, is not truly limited. It exists by decree, by the will of those who print it. Satoshi Nakamoto saw this clearly. In his early emails and forum posts, he never spoke like a revolutionary. He spoke like an engineer who wanted to fix a broken mechanism. He wanted to build a system where money's supply was predetermined, transparent, and immune to human interference. That's why Bitcoin's maximum limit of 21 million was never meant to be adjusted. It wasn't chosen at random. It was the mathematical reflection of a principle, that value must be rooted in limitation. In one discussion on the Bitcoin Talk forum in 2010, a user asked Satoshi, "Why 21 million? Why not 100 million or some other number?" Satoshi replied, in his calm, brief way, "If you run the numbers, it turns out that with the block reward halving every 210,000 blocks, the total ends up being 21 million coins. It's the predictable outcome of the schedule." Behind that technical answer, though, was something deeper. A vision of a world where no single person, government, or company could alter the rules of money. Every coin mined, every transaction recorded, every halving event, all of it follows the same transparent code. And that transparency is what gives Bitcoin its most unusual strength. Trust without trust. You don't have to believe in anyone to use it. You only have to believe in mathematics. This was radically different from the financial world of 2008, where entire economies depended on human decisions, interest rates, stimulus packages, bailouts. When panic struck, leaders printed. When confidence faded, central banks adjusted. And in doing so, the link between effort and reward, between labor and value, became blurred. Bitcoin's design quietly restored that connection. Its rules were not negotiable. They existed outside politics. They followed only one rhythm, the passing of time itself, measured in blocks every 10 minutes. In this way, Bitcoin was not just an invention of technology, it was a reflection of something deeply human, the longing for fairness, for a system where no one could cheat simply by creating more of what others worked hard to earn. This is why scarcity matters. It protects meaning. It tells us that something cannot be easily replaced. And when something cannot be replaced, it begins to hold value. Gold has that quality, land has it, time has it, and now in a purely digital form, Bitcoin was designed to have it too. Its 21 million limit was not only about math, it was about discipline, about creating a form of money that forces humans to respect the boundaries of creation, just as nature limits gold beneath the earth. So when people ask why there will only ever be 21 million Bitcoins, the answer is both technical and philosophical. Technically, it's the result of halving and block reward schedules. Philosophically, it's a mirror, showing what happens when humans choose restraint over abundance and precision over chaos. Satoshi once wrote, "Lost coins only make everyone else's coins worth slightly more. Think of it as a donation to everyone." Even this small comment reflects his belief that scarcity is not a flaw, it's the very essence of value. In a world where everything can be copied, music, videos, words, and even identities, Bitcoin offered something that could not. A digital object that could not be duplicated, inflated, or rewritten. Something rare by design. And that is what the number 21 million represents. Not a random limit, but a message quietly encoded into time itself.
Let's slow down. The number 21 million isn't random. It's the heart of Bitcoin's design. a mathematical rhythm that controls how new coins are born. When Bitcoin was launched in January 2009, miners who verified transactions on the network were rewarded with 50 Bitcoins for every new block they added to the blockchain. A block, simply put, is like a page in Bitcoin's public ledger, a record of transactions. On average, one new block is added every 10 minutes. That means in the early days, roughly 7,200 Bitcoins were created each day. At that time, those coins had almost no market value. But what mattered wasn't the price, it was the principle. Satoshi Nakamoto wanted Bitcoin to imitate the scarcity of gold. In the physical world, gold becomes harder to mine as time goes on. The easiest veins are found first. Deeper layers require more effort and energy. In Bitcoin, this same idea is coded directly into the protocol. Every 210,000 blocks, which takes roughly 4 years, the reward that miners receive is cut in half. This event is known as a halving. It's not controlled by any government or company. It happens automatically, every 4 years, a heartbeat of mathematical discipline. Here's how it works historically. 2009 to 2012, 50 BTC per block. 2012 to 2016, 25 BTC per block. 2016 to 2020, 12.5 BTC per block. 2020 to 2024, 6.25 BTC per block. 2024 to 2028, 3.125 BTC per block. With each halving, fewer new Bitcoins enter circulation. Eventually, around the year 2140, the reward will reach 0. That's when the total number of Bitcoins in existence will approach 21 million, and no more will ever be created. This mechanism means that Bitcoin's supply growth slows predictably, like a pendulum gradually coming to rest. Compare that to traditional fiat currencies, dollars, euros, yen, which can be printed at will by central banks. When governments need to stimulate economies, they can increase the money supply. But with Bitcoin, no one can print more coins. That's why some call Bitcoin digital gold. Its scarcity is absolute. Its schedule is known. Its trust doesn't depend on human promises, but on open code and global consensus. Now let's think about what this means economically. When an asset supply is limited, but demand grows, its price tends to rise, not because of speculation alone, but because people begin to recognize its scarcity. In Bitcoin's history, each halving has been followed, months or even a year later, by a period of price appreciation. After the first halving in 2012, Bitcoin rose from around $12 to over $1,000 in late 2013. After the second in 2016, it rose from about $650 to nearly $20,000 in late 2017. After the third in 2020, it climbed from around $9,000 to above $60,000 in 2021. Of course, those cycles also came with deep corrections and long winters. But through all the noise, the halving rhythm continued, quietly, predictably, like the phases of the moon. This design creates something rare in modern finance: monetary predictability. Every participant, whether miner, investor, or student, can see the full issuance schedule for the next 100 years. In a world of uncertainty, Bitcoin offered a strange new stability. Not in price, but in principle. It taught a simple truth. When you can't change the rules at will, every unit starts to matter. And that is the quiet brilliance of 21 million.
Every great idea, no matter how mathematical, begins with people. Behind Bitcoin's coded precision were human hands, human doubts, and human faith. In the early days of Bitcoin, from 2009 to 2011, the network was small and quiet. Fewer than 100 active users existed. Among them were names that would later become legends in the crypto world: Satoshi Nakamoto, Hal Finney, Laszlo Hanyecz, and a handful of curious programmers who believed that digital scarcity could actually work. Hal Finney, the first believer. Hal Finney was a computer scientist, a veteran of the cypherpunk movement, a community devoted to privacy and cryptography. He was the first person, after Satoshi, to run the Bitcoin software. On January 12, 2009, he received the first Bitcoin transaction ever made, 10 BTC, sent directly from Satoshi Nakamoto. At that time, those 10 Bitcoins had no market price. They were simply lines of code, a test of trust between two people who had never met. Hal wrote later on a Bitcoin forum, "Running Bitcoin." That short post became one of the most iconic messages in crypto history. Hal understood that Bitcoin wasn't just a new payment system. It was a proof of concept that money could exist without banks. He saw that 21 million wasn't just a number. It was a promise that no one, not even its creator, could break. Even as he battled ALS, a degenerative disease, Hal continued to correspond with Satoshi and refine the code. He passed away in 2014, but his words still echo through the community, a quiet reminder that belief often begins before proof. Satoshi Nakamoto, the invisible architect. We still don't know who Satoshi was, a single person or a group. What we do know is that Satoshi disappeared in 2010, leaving the project in the hands of the community. Before leaving, Satoshi wrote, "I've moved on to other things. It's in good hands." Those words marked the beginning of decentralization, not only in technology, but in leadership. No CEO, no central figure, just code and consensus. In Satoshi's writings, there's a recurring theme of restraint. He didn't try to make Bitcoin infinite. He didn't make it easy to control. He gave it boundaries, 21 million, because he understood something deeper about human nature. When supply is limitless, discipline disappears. Laszlo Hanyecz, the first to give Bitcoin real-world value. In May 2010, Laszlo Hanyecz, a programmer from Florida, made a post on the Bitcoin Talk forum. "I'll pay 10,000 Bitcoins for 2 pizzas." A few days later, someone accepted. 2 pizzas were delivered to his home in exchange for 10,000 BTC, worth about $41 at the time. That moment marked the first time Bitcoin was used to buy something tangible in the real world. Laszlo didn't lose money, he made history. He showed that digital scarcity could translate into real value, a step every monetary system must pass through. Paul Tudor Jones, The Modern Validation. Fast forward to 2020, in the middle of the COVID-19 crisis. Global central banks were printing trillions of dollars to stabilize economies. Amid that chaos, one of Wall Street's most respected investors, Paul Tudor Jones, made a statement that surprised the financial world. He revealed that he had invested in Bitcoin, calling it the fastest horse in the race, a hedge against the debasement of fiat currency. For a man who made his fortune in traditional markets, that endorsement symbolized a shift. Bitcoin was no longer a fringe experiment. It had entered the global conversation about value. The lesson behind the names. Each of these people, Hal, Satoshi, Laszlo, and Paul, reflected a different phase of belief. Hal believed before the world cared. Satoshi built, then stepped away. Laszlo proved Bitcoin could buy something real. Paul showed that even the old world of finance could learn from the new. Together, they form a quiet chain, a human blockchain of conviction. And from them, we learn something timeless. Value begins as faith. It becomes structure through design. And it endures through trust. The glow of dawn reached Satoshi's apartment window as he looked at his screen one last time before going to bed. He wasn't rich, he wasn't famous, and he wasn't sure if anyone would ever care about what he'd built. But he smiled, a small, quiet smile, because he knew he had done something that might outlive him. Bitcoin was a balance between trust and mathematics. Trust because people had to believe in it for it to have meaning. Mathematics because it didn't need to ask for belief. It could prove itself. That was the paradox of human money. Every currency humanity had ever created started with trust. Trust in a king's face printed on a coin. Trust in a government's promise to redeem paper for gold. Trust in a central bank to manage inflation. But every one of those systems, sooner or later, faced the same problem: human greed. Kings shaved their coins. Governments printed too much paper. Banks lent more than they held. Scarcity, that precious sense of enough, was always sacrificed for power or comfort. Bitcoin was the first to remove human hands from the supply lever. Its scarcity was not a political decision, but a mathematical law. 21 million coins, not one more, not one less. Let's pause here for a moment and imagine something. Suppose you had a printing machine at home. You could print as much money as you wanted. At first, you'd feel powerful. You could buy anything. But soon, everything around you would become more expensive. People would start demanding more of your printed money for the same things. You'd realize something strange. Even though you had more, you could buy less. That's inflation, the quiet theft that happens when scarcity disappears. Bitcoin was designed as a cure to that disease, a medicine for trust. It didn't rely on promises, it relied on math. Satoshi once wrote, "The root problem with conventional currency is all the trust that's required to make it work." He wanted a system where you didn't have to trust a government or a bank or even him. You'd only have to trust the code. That's why the 21 million limit mattered. It wasn't just a number, it was a symbol of integrity. Every 10 minutes, the Bitcoin network creates a new block. In that block, new coins are released as rewards to miners. But every 4 years, the reward is cut in half. 50 BTC to 25 to 12.5 to 6.25 to 3.125, and so on, until one day, around the year 2140, the reward becomes zero. And then that's it. All 21 million coins will have been created. The code will stop producing new Bitcoin. The era of issuance will end. And the system will have proven something profound, that humans can agree on enough. In a small cafe in Berlin years later, a young economist once said softly, "Bitcoin is the first time we built scarcity out of electricity." That was true and beautiful. Scarcity no longer depended on mining gold or enforcing laws or believing in kings. It was written in the logic of computers. A new kind of trust born not from authority, but from consensus. And so when people say 21 million, they're not just quoting a number. They're whispering a philosophy, a belief that value should not be infinite, a belief that discipline can exist without rulers, a belief that math can protect us from ourselves. Satoshi's laptop cooled down. He stood up, stretched, and looked at the quiet dawn. He had given humanity a paradox, a currency without rulers, a trust born from numbers, a scarcity no one could break. He didn't know if the world would understand, but he knew it was fair. And for him, that was enough.
Every heartbeat has a rhythm. Every cycle of life, from the tides to the seasons, has a pulse, a natural ebb and flow. Bitcoin, too, has a heartbeat. It's called the halving. Every 210,000 blocks, roughly every 4 years, Bitcoin's reward for miners is cut in half, not by a person, not by a government, not by a vote, but by code, like the quiet, measured beat of a clock that never stops ticking. Let's go back to the beginning, the year 2009. The reward for each block mined was 50 bitcoins. Back then, each bitcoin was worth almost nothing. No one traded it, no one cared. It was just lines of code shared among a handful of cryptography enthusiasts. But that first phase, the Genesis era, planted the seed. Then, in November 2012, the reward dropped from 50 to 25. The first halving. The community watched in awe. The code worked exactly as promised. No one could change it. No central authority could intervene. It was as if the network was saying, "Scarcity begins now." Each halving marked a new chapter in Bitcoin's story. Year, 2009. Block reward, BTC, 50. Approximate BTC price, around 0. Significance, birth of Bitcoin. Year, 2012. Block reward, BTC, 25. Approximate BTC price, around $12. Significance, first halving, proof of discipline. Year, 2016. Block reward, BTC, 12.5. Approximate BTC price, around $650. Significance, recognition, and speculation. Year, 2020. Block reward, BTC, 6.25. Approximate BTC price, around $9,000. Significance, institutional curiosity. Year, 2024. Block reward, BTC, 3.125. Approximate BTC price, around $65,000+. Significance, global conversation about scarcity. Each time, the same pattern appeared. Fewer new coins, more attention, rising awareness of what limited supply truly meant. It wasn't about price. It was about mathematics meeting emotion. When miners receive fewer coins, they must work harder. Their machines, humming endlessly in cold warehouses, compete for rewards that shrink over time. Some drop out, others innovate. The strongest survive. The halving doesn't punish. It purifies. It removes the excess, leaving behind only those who truly believe. It's an economic version of nature's rhythm.
just as trees shed leaves in winter to prepare for spring. In traditional finance, central banks adjust interest rates, print money, or expand credit. They react to fear, to recessions, to politics. Bitcoin doesn't react. It evolves, on schedule, without emotion. Every 4 years, it breathes in, then out. Scarcity increases, confidence follows. That's why many call the halving Bitcoin's heartbeat. Imagine sitting in a quiet room, hearing the slow, steady rhythm of a clock. Tick, tick, tick. Each sound the same, each second equal. That's what Bitcoin does. Block by block, minute by minute. No rush, no panic, no surprise. Every halving, it reminds humanity, time matters. Patience creates value. After each halving, something curious happens. People talk less about getting rich and more about what money itself means. Because when you realize the supply is finite, you start to think differently about consumption, savings, and the future. Bitcoin's rhythm teaches restraint, the same way a gardener must wait for fruit to ripen. You can't rush time. You can't rush value. In 2020, during the pandemic, the world printed more money than ever before. Trillions appeared in digital ledgers overnight. People lost faith, quietly but deeply. And somewhere, across the internet, Bitcoin's code continued its heartbeat. 10 minutes per block, 3,600 blocks per day. Reward halving every 4 years. Unmoved, uncorrupted, untouchable. It was a strange comfort, like finding a lighthouse still shining in the storm. That's what the halving is, a reminder that discipline can be beautiful. Not harsh, not forced, just pure, in rhythm with time itself. Soft pause, a slow inhale, a calm exhale. When the next halving arrives, millions of people will once again watch the countdown online. They'll celebrate not because they'll get richer, but because it means the system still works. Because trust is still intact. Because math still rules where greed cannot. When Satoshi disappeared in 2010, Bitcoin was still a whisper. A few thousand enthusiasts mined it quietly on home computers. They shared ideas on obscure forums, traded coins for pizza, and argued about whether this digital gold could ever matter. No governments cared. No bankers paid attention. No one believed it could last. But slowly, something invisible began to form: belief. At first, it wasn't about profit. It was about possibility. The idea that humans could agree on value without permission. A man in Finland sent Bitcoin to a stranger in Japan, and it arrived. No bank, no middleman, no delay. Just code, trust, and math. That moment was magic, like watching lightning in a bottle. Because for the first time, people realized money could exist without a government. Value could exist without a vault. That realization changed everything. Let's pause here for a quiet reflection. What makes gold valuable? It's shiny, rare, and hard to mine. But more importantly, people believe in it. What makes the dollar valuable? It's paper. It has no intrinsic worth, but people believe in it. Value is never just in the object. It's in the story we tell about it. And Bitcoin told a new story, one that blended mathematics with human longing. As Bitcoin's supply kept decreasing with every halving, belief increased. Scarcity started to feel real.
people began to notice that every time the reward dropped, the price, over months or years, tended to rise. It wasn't a coincidence. It was psychology. When people see something rare, they want it. When they understand no one can make more of it, they respect it. That's how digital scarcity, something invisible, turned into something powerful. In 2013, when Bitcoin reached $1,000 for the first time, the world was shocked. How can code be worth that much? Critics asked. But believers smiled quietly. They knew the answer was simple. Because people agreed it was. The same way shells once became currency. The same way gold once became wealth. The same way paper became a symbol of power. Bitcoin had joined that ancient lineage of stories we trust. Each wave of believers built something new. The first wave, from 2009 to 2012, were the cypherpunks, dreamers of digital freedom. The second wave, from 2013 to 2016, were the early adopters, risk-takers who saw opportunity before the crowd. The third wave, from 2017 to 2020, were institutions, funds, companies, and investors seeking protection from inflation. The fourth wave, from 2021 to present, are ordinary people, global citizens searching for fairness in a world drowning in debt. Each wave added another layer of trust, not in a person, but in a system. It's fascinating when you think about it. Bitcoin didn't change because of marketing. It changed because of time. Every 10 minutes, a new block. Every 4 years, a new halving. Every cycle, more believers. It was patience, not persuasion, that built faith. A famous investor once said, "Bitcoin is a mirror. It reflects what we believe money should be." And in that mirror, humanity saw a quiet truth. We no longer wanted endless money. We wanted meaningful money. Money that doesn't inflate with lies, money that doesn't punish savers, money that belongs to everyone and no one. Scarcity gave Bitcoin its skeleton, but belief gave it life. That's why no government could kill it. No crash could erase it. No critic could bury it. Because Bitcoin wasn't just a program, it was an idea. And ideas, once born, don't die. They evolve. A soft pause. The sound of rain on glass. A deep exhale. Every era has its myth. Gold had its age. The dollar had its empire. And now, perhaps, Bitcoin has its dawn. But remember, belief cuts both ways. It can create value. It can also create bubbles. True understanding is knowing the difference.
Imagine the year 2140. The world is quieter. No more Bitcoin mining rewards. The last fraction of the 21 million coins has been released. Miners no longer earn new Bitcoin. They only earn fees from transactions. And yet, the network continues, block by block, heartbeat by heartbeat, just as it always has since 2009. Nothing dramatic happens that day. No fireworks, no alarm. Just one more block confirmed, and the system quietly fulfills its promise. Exactly as written by an unknown mind more than a century before. It's a strange thing, isn't it? Most inventions fade. They become outdated, replaced, or forgotten. But Bitcoin was built for time. It was born to survive generations, not trends. Satoshi wrote code that would outlive him and all of us. The idea of a fixed supply was not a gimmick. It was a message to the future. May your money be finite. May your trust be infinite. When we think of the last Bitcoin being mined, we often imagine scarcity, the end of creation. But perhaps it's the opposite. Perhaps it's completion. The moment when technology and philosophy meet in perfect balance. No more supply, no more printing. Just circulation, trust, and human choice. In that moment, Bitcoin stops growing and begins enduring. Like gold in the earth. Like stars in the night. Let's return for a moment to the rhythm of its creation. Every 10 minutes, a new block. Every 4 years, a smaller reward. Every century, a full circle of faith. These numbers are not random. They are the heartbeat of patience. The world rushes, but Bitcoin does not. It moves like the tide, slow and constant. Perhaps that's why it feels different from any currency before it, because it teaches us to slow down, to measure value not by today's price, but by time itself. When the last coin is mined, some people might mourn, as if something has ended, but for others, it will be a celebration, a reminder that discipline survived human greed. The supply will never change, the rules will never bend, and in that permanence there is peace. By 2140, humanity may live among stars, our cities built on AI, energy drawn from suns. Yet somewhere in the digital soil of the Internet, a small, quiet network will still hum, protecting a ledger that began in 2009. Unbroken, unowned, unending. Perhaps one day a child will ask their grandparent, "What was Bitcoin?" And the grandparent will smile softly and say, "It was the first time humans decided to trust math more than kings." That answer will be enough. Because Bitcoin was never about technology alone. It was about human nature, our need to believe in something honest, something limited, something true. As you breathe now, think of the slow rhythm of those blocks etched forever into digital stone. They are still being written, somewhere, right now. Not for fame, not for greed, but for continuity. For every moment of fear, for every crash and recovery, Bitcoin's quiet lesson has been the same. Value endures if you give it time. The screens fade, the markets sleep. The noise of speculation disappears into silence, but the idea remains. Still, calm, waiting. The 21 million, not a number of greed, but a symbol of enough. Because when we finally understand enough, we begin to live, not just to trade. This is the quiet rhythm of the market. Slow, steady, infinite in patience. If this story brought you calm tonight, follow Sleep Capital and return again tomorrow for another story about the hidden heart of money. Sleep well, and let your thoughts rest with the rhythm of value.
There's something peaceful about endings, not because they are final, but because they remind us that time always moves forward, quietly, gently, without our permission. Tonight we've followed a long journey from the chaos of money printing to the stillness of a code that can never be changed. We have seen how one anonymous creator, known only as Satoshi Nakamoto, left behind no company, no bank, no face, only an idea. That idea was not loud or glamorous. It was a whisper of restraint, a soft rebellion against infinity. And from that whisper came the rule: only 21 million. A limit not born from greed, but from wisdom. A belief that value means nothing without boundaries. If you've listened this far, let the noise of markets fade from your mind. Let the charts dissolve. Let the predictions go. Because underneath all the speculation and headlines, there is only one quiet truth. Time creates value. It always has. It always will. From gold buried in the earth to Bitcoin mined from math, the rule of value is the same. What endures becomes precious, and endurance requires patience. In the quiet of this moment, think of what Satoshi left behind. No signatures, no speeches, no wealth. Only code, and the trust that strangers would protect it. And somehow, they did. We did. That is the most human part of all of this, that a machine born of math survives not because of force, but because of faith. Perhaps that is the real lesson of the 21 million, that limits give life meaning. A painting is beautiful because the canvas ends. A song moves us because it must stop. And money, like time, only matters when it cannot be infinite. So tonight, as you drift toward sleep, let this story settle like gentle waves in your mind. Remember, value is not noise. It's not in the rush or the chart. It's in patience, discipline, and the quiet courage to wait. The world may print endlessly. Markets may rise and fall. But truth, true value, is always scarce. If tonight's story gave you peace or sparked a quiet question, leave it for me below. Tomorrow night, we'll explore another story, another moment where money met meaning and humans learned a little more about trust. Until then, breathe deeply, let go of today's noise, and sleep with the rhythm of patience, the rhythm of markets, the rhythm of time. This is Sleep Capital, where finance rests and wisdom wakes. Sleep well, Moonlight.